that proves who we are versus AI, right? We're living with another creature who can mimic us. So we've got to prove ourselves. We've got the storage of all things in a digital world. They need to have value. We've got just the use of this globally decentralized, secure database is wildly important. People still don't understand how big it is. And so these guys are building the stack for that. A lot of people are talking about, hey, the Internet of Finance, that Solana's thing right now. Bitcoin is like the digital goal. It's really the whole internet that needs to happen. So these guys have a chance of doing that. Will they succeed? I have no idea. Time will tell. Have they built a technology, the fastest, cheapest? Yeah, but that's not everything. It has to get adopted. So that's the game.
Hey guys, welcome to Everyday Finance. In his analysis of the path leading to 2026, Raoul Pal describes it as a conflict between increasing debt, shifting dollar dynamics, and the ongoing debasement trade that continues to promote the adoption of cryptocurrencies. The capacity of Bitcoin to escape a more severe bear market is contingent upon three interrelated pillars: the liquidity of central banks and the budgetary stability of the United States. Even if Bitcoin has recently dropped below $100,000, the long-term bullish structure is still intact as long as the cryptocurrency maintains its 200-week exponential moving average at $100,950 and maintains its weekly relative strength index RSI above 45. The fact that these levels have traditionally represented cycle bottoms is an indication that Bitcoin's overall upward trend has not yet been interrupted.
This is exactly that second cycle Lindy effect play we were talking about with solar.
Interesting.
What is the probability that we don't have an immersive digital world? About zero.
Yeah, I was about to say.
What is the sentiment on the metaverse? About zero.
Yeah.
Sounds like free money. How do you express that view? I don't know yet. But that to me is a clear signal that we both agree there is zero chance we're not going there.
Yeah.
And yet everybody have written it off and laughs at the term metaverse.
Yeah.
I'm like, okay, there's a huge trade to come out of that because it's real. It's the future of the internet. It's a visual internet. So that's, I say that, I just hadn't thought, it's been in my head, but I'm thinking, so now we need to find a way to play that.
Exactly. Well, that's why I was asking.
And it can't be buying Meta or Apple. There has to be another player. I don't know what it is yet, but that's for real. Now, the NFT thing was another one of those.
Yeah.
They've been around really since about 2017. So they've been around a while, but there was the massive speculative excess of the last cycle. Before there was the experimenters, people like Xcopy, a British artist, anonymous artist, that started experimenting. So that was the experimentation phase. It ended up with a hype cycle phase and a collapse. So most people who were trading crypto markets at the time are now burnt by NFTs because they bought some stupid PFP based on some animal, pretended it was a community. It wasn't a community. It was everyone was just speculating. But what happened at the end of that was another one of these perfect Lindy effect trades. So it all falls apart. Nobody has the faith. And I start to see the high end, the art market is the opposite. Like diamond hands. Things are trading at still massive prices. And you see the people involved in the space and and that got me into that. It was again, second cycle trade. It was like 2023, 4. I just started buying as much of this stuff as I could possibly afford because I knew in a digital world, scarce digital assets will be valuable. And art is culture. And if we're all about to take this crypto market from $4 trillion today to $100 trillion, we'll make a shit ton of money. In fact, more money than humanity's ever made in a period of time. And it's fractionalizable. Anybody can do it anywhere in the world. So we're going to have a lot of people with great memories of this time. And art is culture. And it'll encapsulate it. And it's a memento. And as you get richer, you'll bid up for the art from the early days, all of this stuff. So I just realized it was another one of these trades. So you can see how my brain thinks, right? We keep coming up with these all the time. Here's another one. And so I really put a long-term thought in 10, 20 years' time, this stuff is the Warhols of the time. Now, some of this stuff is, and people watching this will, oh, it's all worthless junk. Yeah, some stuff is trading at 13 million, one of the crypto punks. We saw that 69 million people last cycle. My guess is Xcopy will trade for 20 million this cycle. And if that's not the signal to people that they misunderstand this because they think that some cartoon PFP was the market, it wasn't. Crypto's brilliant at speed testing stupid shit and breaking it. And what comes is the idea. So memes, there was two things within that got testing. One is mimetics and the power of attention.
Yeah.
What value is that? Secondly, it was instant capital formation, which is like the future of venture capital, future of every business. That is what got tested there. Mm-hmm. And so everyone at the end of this cycle go, that meme stuff was bullshit. Yeah. And what's happening out of that will come the same trade. I know it. I've seen it 100 times. That was the NFT trade as well. People missed it. And we'll see a few more of these. And that's, that's the beauty of this game. Particularly if you've got a long-term view, you get to see these setups coming. It seems that this stuff happens for a purpose, and it's kind of weird, right? It's sort of preordained something. And what it's doing is, because it's a distributed network of people doing stuff, within that is signal. It was like the same idea of the Real Vision community, right? It's all the same idea. Is somewhere within that, there is signal. You need to figure out what was the signal. What lesson did we learn? That goes back to the beginning of our conversation, is about when you're trading.
Yeah.
If you don't know what you learned, then you're not trading. You're not going to be a successful investor. So it's the same thing here. We're just trying to figure out, okay, that all blew up. What was there? What's there now? And keep your eye on it. Don't write it off as a zero. And that I think is, and I've found that is the easiest trade, because it's the de-risk trade. Because it's not going away, like solar, not going away. Down 99%. All we need is something at the margin to change. AI, I need energy immediately, feed me. Mm-hmm. Oh, maybe this will work. That reminds me of one of the other great trades I'd done, and people did much better than I did, was after the Russian crisis in 98, 99, 2000, 2001. Oil had got down to $9. Russia had blown up. It was all down 90%. Down 90%, always a really interesting time.
Yeah.
I start looking at these Russian oil companies and realize that Russia owns more natural resources than the rest of the world added together. Most of this stuff's trading on a P of 3. It's the cheapest equities I'd ever seen in my entire life. I remember when I was at GLG, just buying baskets of this stuff. And that stuff, I don't know, 20x'd.
There has been a subtle shift in the policy of the Federal Reserve, which is the second essential piece of the puzzle. Considering that the annual deficits of the United States have reached about $2 trillion, the Federal Reserve may be compelled to implement covert liquidity injections, which Arthur Hayes refers to as stealth QE. There is an increase in market liquidity and support for risk assets, such as Bitcoin, as a result of these repo operations, which function directly as money printing. As more dollars are in circulation, there is a tendency for the demand for non-sovereign assets to increase. This makes liquidity the unseen hand that is responsible for Bitcoin's resiliency. However, the recovery of Bitcoin is also dependent on the stability of the United States government's finances. Once the shutdown of the United States government is resolved and Treasury spending resumes, liquidity will flow again, which has the potential to spark the next step upward and turn worries about the market into renewed confidence.
Great trades of that type was a guy from here in Dallas called Richard Rainwater. He used to work for the Bass family, which is one of the big family offices here in Texas. And Richard Rainwater, because he, in Texas, had traded a lot of oil, and the Bass family had been in the oil business. And this is when oil got down to $8 or $9 a barrel, $9 a barrel. He started doing a lot of work on this whole thesis that he found on the internet randomly, early days of the internet as well, right? We're talking 2000, about peak oil. Now that peak oil thesis never in the end played out, but he went so far down and then just bought gigantic futures positions and call option positions. Started with calls first because he wasn't sure he was going to get his timing right. Got like 1 year call options and then layered into leverage on it because he realized everybody got the trade wrong. Oil was down again, whatever it was, 80% or something, and did that trade. So yeah, in fact, I hadn't realized how much I love those types of trades because there's some really great ones, but these change your life.
Exactly.
So there's another one of these that is, and it's pretty obvious that it's right now, but it's going to be more right, is like, I saw Amazon when it came out and it was a book company. It sold books.
Yeah.
And it was trading at a P of 800 for most of the time. And then they were like, yeah, well, they're reinvesting the profits, but nobody figured it out. And then they were selling other stuff. And then they bought a cloud business and all this. Nobody realized that Amazon was this marketplace network that was global, gigantic. And every time I see a technology company trade at an absurd valuation for a persistent amount of time, it's telling you something that you don't understand. It's normally telling you it's based on Metcalfe's law and it's a network. And we've seen it with Tesla, right? Analysts can't stand that company because they can't understand it. I'm like, this is Amazon all over again. Now it's going to be bigger, I think, much bigger. And it's already grown a lot, but you know, Amazon's consistently done this network adoption model chart forever. And Tesla, I think, is going to do this at scale that we've never seen before because people don't understand it. The other one that happened, and I don't know whether this is going to be one or the other yet, is Circle. So Circle was the stablecoin provider in the US. It's trading at a stupid multiple because basically it's like a money market fund. You'd think of that you can trade, but it's not. When all of the collective crowd is doing this, somehow it probably means it's a network. And it's always going to trade frustratingly expensive and grow faster than people imagine for reasons people don't understand. Or it may be overvalued because there's very few crypto companies. So that's another one that I look for as well, is there's like repeats of things that you've learned from the past. My story of that is I followed the Facebook Libra story. Facebook has the largest network on earth, privately owned network on earth, 3.5 billion people. They tried to launch a global cryptocurrency, which was a basket of currencies that you could pay for anything on. It's a brilliant idea. It got stopped by the World Bank, the United Nations, and pretty much every major government shut it down in seconds. Why? You've got a population of 3.5 billion in Facebook world, and given their own currency, you're now the most powerful nation on earth. And they shut it down. But I followed that project all the way through, and I'd interview some of the people involved in it. And I got a phone call from one of the top crypto lawyers in the world, who's a friend of mine. He called me up and said, I've never asked you to do something, but you should join this foundation. I'm like, what is it? It's like SUI. I'm like, no idea what that is. It's like, it's the Facebook team. They've spun out and they're going to build this whole entire blockchain architecture. And so I actually joined the foundation first because I realized it was going to be a big project. And I thought I wanted to go on that journey of at the ground, day one of a giant layer one, and see what happens. I hadn't put my own capital in. I was given tokens to be part of that. But over time, as I saw that the entire stack, they're trying to rebuild the entire internet from storage layer to the transfer layer to security layer, the ID layer of the whole internet. I'm like, okay, fuck, these guys are amazing. I mean, these guys are stupid smart people. And I start looking at price. And the chart looks like it's going to start outperforming the Solana that I was owning. I'm like, because it came out, it dumped.
Yeah.
It then, because that was the unlock, and as soon as it launches, everyone's like, oh, it's a piece of shit. And then it's not a piece of shit, because again, it then bottoms higher. It starts basing. It's like, okay, this is telling you something. I look at it versus Solana. It's like, this looks like it's going to outperform Solana. And I started switching my own capital. And not because I'm on the foundation. I don't really get any inside information about any of that. It's just that the price starts outperforming. And by the time I'd moved all of my crypto into SUI and took this bet that's not, again, not for everybody to do. I'm an experienced risk taker, and I will take obscene amounts of risk when I see a really big opportunity, but I can be wrong. But that's what I saw in it. I saw that, okay, if we are going to convert all of the Web 2 world to Web 3, so a lot of people think of crypto as money, Bitcoin. Then they think of it, all finance stuff goes on blockchain. It's not. It's actually the whole internet goes on blockchain. That's what people don't understand. We're going to have to have digital identity that proves who we are versus AI. Right? We're living with another creature who can mimic us. So we've got to prove ourselves. We've got the storage of all things in a digital world. They need to have value. We've got just the use of this globally decentralized, secure database is wildly important. People still don't understand how big it is. And so these guys are building the stack for that. A lot of people are talking about, hey, the internet of finance, that's Solana's thing right now. Bitcoin is like the digital goal. It's really the whole internet that needs to happen. So these guys have a chance of doing that. Will they succeed? I have no idea. Time will tell. Have they built a technology, the fastest, cheapest? Yeah, but that's not everything. It has to get adopted. So that's the game.
In addition, Pal investigates the hype surrounding token burns, which are frequently portrayed as methods for increasing prices. Although the burning of tokens decreases the supply, the only way it can produce value is if it is linked with actual demand, usage, and transparency. BNB, which is traded on Binance, is an example of a successful situation in which quarterly burns are related to actual trading volume and network activity. This has the effect of transforming ecosystem growth into measurable scarcity. In contrast, the large burns to Shiba Inu have not had much of an effect because the demand for it has decreased while the total supply has remained enormous. The message is crystal clear. Scarcity is worthless if it does not have any utility. It is not through spectacle-driven supply cuts that true value is created in the cryptocurrency market. Rather, it is through acceptance, trust, and economic activity.